Today we're diving into important topics that affect so many Americans. Credit card debt, the power of home equity, and how to make smarter financial decisions in today's world. Whether you're carrying some financial debt or just looking for ways to leverage your equity, our goal is for you to leave with insights to help you on your financial journey. Let's start with a simple truth. Your home equity is one of the most powerful financial tools you have at your disposal as a homeowner. Many people don't fully understand how to harness that power, but I'm here to break it down for you. Right now, the average interest rate on credit cards in the United States of America is 24%. Yes, you heard that right. 24%. With total credit card debt in the US soaring to $1.4 trillion, it's clear that a lot of people are feeling pressure. About 50% of Americans carry credit card debt, and the average person has around 6,000 on their cards. And remember, that 6,000 number includes people who don't carry debt. What's even more concerning is around 48% of Americans are using their credit cards to cover essentials, basic needs like groceries, gas, and medical expenses. In the post-COVID inflationary environment we find ourselves in, credit cards have become a lifeline for many, but at a steep cost. A lot of folks have low-rate mortgages they locked in during the unicorn years. I call the unicorn years because it doesn't match anything else in the last 100 years. They hesitate to refinance or tap into their equity because they don't want to give up the lower rate. But here's the thing. What matters most is not your interest rate, but your monthly expenses. Just think about it. If you're paying $200 to Discover Card plus $300 to American Express and another $300 to Capital One, and let's not forget an $800 car payment, plus that $2,000 mortgage at 3%, all those payments add up together. Paying the minimum balances on those credit cards means you'll be carrying those debts for 15 to 25 years. Do you really want to keep an $800 car payment for the next 6 years? By using your equity to pay off those balances, you could lower your monthly expenses dramatically, and that's where the real savings are. Another benefit is your credit report will look a whole lot better due to credit utilization. As a loan originator, my responsibility is to help you use your equity wisely to improve your financial well-being. But before you consider a refinance or any big financial move, there are some simple questions you need to answer. What are your short-term financial goals? Do you need more money next month? And can a refinance help you achieve that goal? Do you need more of your paycheck to go towards your needs and not these payments? What are your long-term goals? For example, would having more cash on hand today that you're not paying towards credit card debts help you fund a life insurance policy that brings cash value so you can help your child go to college? Or maybe it will help you save for an in-law suite for down the road. We all know that aging happens. It would be convenient to have that in-law suite to help you take care of your parents. Your equity has likely increased, meaning you now have access to your own bank at a much lower interest rate than a credit card or personal loan. This equity gives you more freedom, more economic freedom in a shorter amount of time than most any other financial tool out there. It's a tool that can help you achieve your financial goals, whether that's saving for the future, managing unexpected expenses, or simply lowering your monthly financial obligations. The other positive is that your equity can grow on its own over time due to home price appreciation. The other thing is it will grow as you pay down your mortgage. Many Americans are equity rich right now due to aggressive home price appreciation over the last 10 years. But here's the flip side. The idea of holding on to that equity forever and letting it grow passively is risky. You never know what direction your neighborhood or the housing market will take in the next 25 years. So use the equity wisely today to achieve what's important to you. And what's important looks different for each person and their priorities. So whether you're thinking about refinancing or just exploring how to reduce your monthly obligations, remember, your equity is a tool. It's one that you own, one that can help you manage financial pressures today while building a better tomorrow. Take control of your financial future by making the most of what you have right now.